Thanks very much for your time coming along again. We did a bunch of these presentations about 6 months ago, shortly after our IPO, to explain the business, and I think a lot of you guys got your heads around it very well. I'll do a brief recap, but really today's presentation is more focused on the more recent annual results, and I think of more interest, the future opportunity of Manolete. What could Manolete look like in the next phase of growth? So just a brief recap on the model. So we specialise in UK insolvency litigation claims. There are 14,000 companies at least that go bust every year in the UK. There are 40,000 individual bankruptcies, and it's the claims within these estates that we buy or fund. The attraction of litigation finance in this market is because of a unique tension. The liquidators, administrators, trustees in bankruptcy, they have a statutory duty under the Insolvency Act to maximise the returns to creditors. The banks, HMRC, the window cleaner, the pension fund, their job is to maximise the money back when the company's gone bust. But at the same time, they act with personal liability, and there's no money left in the pot. In 99 out of 100 cases, the money's gone, the company's gone bust. So if litigation finance ever had a really lovely fit with any business sector, insolvency is it. One of the great advantages of the Insolvency Act 1986, it allows third parties like Manolete to buy those claims. And that's the key differentiator to us and our listed peers. They fund other people's claims, so they're not in control of those cases. The claimant is control. When Manolete buys these cases, the law firm reports to us. If there's an offer to settle, it's to us. We decide, not the maybe very emotional, irrational litigant who lost their job, lost their marriage, lost their personal assets. They want to go to court. With Manolete, it's all about the money. And the liquidators, the administrators, they just want the money back. And certainly the creditors, which is the whole point of this, which is usually HMRC, is the biggest creditor. When your company's going bust, usually the thing you will not do is pay your tax, corporation tax, VAT across your PAYE. So there'll be a huge tax creditor. And who is that? That's us in this room. That's the hospitals. That's the Brexit bailout that everyone talks about every day. This is serious stuff. This is who we're getting the money for. We're not getting the money for some company or some Russian divorcee. We're getting it back for the taxpayer largely. And we're in control. So how many of these cases? Professor Peter Walton did a super report, 2016. There are 2,300 of these cases back in 2016 that generated £500 million in cash recoveries a year. Now, back in 2016, before the Big Bang happened in our world, 93% of that was done under what we call the old model, this awful ambulance chasing, no win, no fee that you heard about in the PPI world. Adverse cost insurance from the oligopoly of insurance companies charging enormous premiums for covers, up to 80 to 100% of covers they wanted. So all this money that was being eventually over 3, 4, 5 years recovered by liquidators was disappearing into the pockets of the law firms and the insurance companies. What was the point of the Insolvency Act? And what happened in the UK was that we went flying down the list of the World Bank rankings for insolvency, making the UK a terrible place to do business. We were 14th. We were behind Puerto Rico, had a better insolvency regime than Manolete. Finland was number 1. Well done, Finland. And the single biggest criterion was recoveries from insolvency for when a company goes bust. So we are creating no less than a revolution in insolvency recoveries. And why, again, this is important. I'm going to mention Brexit again. If it does go through in the next few months, we're going to be all about trade agreements, inward investment into the UK. We need people putting money in with confidence into our businesses in the UK. So what we're doing, what our shareholders are supporting, is actually a very important thing. Now, the big bang happened in 2016 when the government woke up to this, the Jackson reforms, as you probably heard of this, and they said, from now on, all those huge insurance fees, the huge success fees for the lawyers couldn't be claimed from the defendant. They've got to come out of the recovery. And the trouble is, those costs were running 200% the size of the damages being recovered. So all of that 500 million was disappearing. They looked at our numbers. They showed that the costs of running under the Manolete model were just 15% of what was recovered. So obviously ours, as Lord Justice Jackson himself said, the funding model was the way forward. So this really opened up the entire market. And our mission, as I say there at the bottom, our mission is to transition the entire market to our model, and it's a very big market. Just to put it into context, we've just put out some, I think, very well-received financial results. We had 61 cases, up from 29 core insolvency cases a year before, but we're after 2,300. And those are the ones that see the light of day. There are thousands more that don't see the light of day. Very briefly to touch on the results. Anyone that's got an interest, of course, would have pored over this, but they were good. I see this as just a small step in the journey that we're on now. And we are absolutely delighted to have now a public listed platform, because if we are to achieve anywhere near the ambition of transforming this market, we had to have your support, and we're very grateful for it. So EBIT was up 77%, PBT was up 85%, EPS was up 70%. We paid our first maiden dividend. Cash recoveries were up almost 50%. And profits on completed cases were up 80%. We finished the year at the bottom there with exactly what we started in cash at the end of the IPO. So at the end of the IPO, we had £10 million net cash, no debt. Today, we've got £10 million in cash, no debt. But what's happened in the in-between? We've bought 50 new cases. We've hired twice the number of staff. We've signed up 3 major marketing agreements with all of the 3 major regulators of the insolvency industry covering the next 3 years. So there's been an awful lot of cash out, but clearly we've had a lot of cash in, such that in a very, very costly 6 months for us, the cash is where you were at the IPO. And for me as CEO, that's a great sign. As I said, the number of cases signed last year had doubled. The average size continues to increase. I'll talk about some of our bigger cases in a minute. That was up 20% last year. But you'll see when the results come out this year that is put into the shade. To give you a feeling of the rate of growth, at the end of 2018, when you look at our accounts, we have 57 live cases. At the accounts that have just been released, we had 84 live cases. Here we are just a few months later, we're up today 111 live cases. So phenomenal growth. This is being driven, as well as by the end of the things, we set up, as we promised at the IPO, a regional network of lawyers. We've got them now full-time Manolete employees in 6 core regions of the UK. So these are partner-level lawyers who have dealt with insolvency practitioners and other lawyers in the region in Manchester, Leeds, Newcastle, Bournemouth, Cambridge, southwestern Wales, Scotland. So these people who've been working in those markets for 30 years and now are our full-time employees, and they're referring through an enormous number of high-quality cases. It is really beyond our own expectations at the time of the IPO. There was a situation in the last 4 weeks of the company where we were signing a new case every day in those 2 weeks. Now, if we can get up to that kind of run rate, I was sitting with Gervais Williams at Miton, one of our shareholders, last week. He said he can see us at 200 cases, if that's the kind of experience we're seeing. So these are phenomenal statistics. Our vintage table is a source of great pride and really the acid test of our business. Burford started doing this a few years ago, rightly so. But where you will see in Burford's and litigation capital management's vintage tables, there's lots of cases still kicking around from several years ago. Burford, I think there's still cases out in 2012, 2013. That's their model. I get that. That's absolutely not a criticism. It's they do long cases, funding people who want maximum recoveries at trial and an appeal, and that's fine. Very, very different to Manolete Partners. Look at this. 0 cases outstanding for all these years, all done, dusted. Even the 2017, of those, 31, only 27 are outstanding there, but of those, 20 are to do with the cartel cases, which I'll talk about in a minute. And there you can see already the increase in the number of signed cases, 31 going to 49, going to 61, as I said, 111 live at the moment. And these regional network of lawyers, they only walked in the door a few weeks ago, no, a couple of months ago. So they've only just started the work. The returns are just unseen in my financial life, and I've worked for very big investment banks. For 8 years solid, the ROIs are triple digit, strongly triple digit. The money multiples are increasing in size, 3.9, 3.1. The IRRs, 8 years consistently spectacular. I think you know who I am, chartered accountant. The other very important person who now heads up a team of 9 strong lawyers, including those regional people, is Mina Halton. She's absolutely fabulous. Been working with us for 5 years, been working in the industry for her entire career. Very importantly, Dr. Stephen Baster was the most senior insolvency judge in the UK for the last 15 years, is a full-time board director of Manolete Partners. This has given us massive credibility, of course, in the market. These are the new regional people and their regions. No need to dwell on it too far, but I would say, having worked with Mina for 5 years, we've got a whole load of new Minas, which just makes life just wonderful to be. A couple of points just here. When I presented this a few months ago, I think the abort rate we were talking about was about 15%. Remarkably, even though we're buying so many new cases, that is going down, and it's because of the quality of the people we're bringing on board. So a very high win ratio now, almost 88% of cases end in a profit for Manolete, and some now are eye-watering numbers, as we'll talk about in a second. So all the KPIs are heading in the right direction. The number of inquiries in the last few months, and this isn't just the people who've come aboard, I think the IPO itself is just, what struck me is that the big insolvency firms, PwC, Deloitte, BDO, RSM, they want to be associated with a winning company, with a strong balance sheet to finance their claims. So we've seen a 44% increase year on year. And looking at June numbers, I just cut them when I did this presentation a week ago. 38 inquiries for June this year, just 23 last year. And it wasn't a bad year last year. The growth in the size of the investments on the balance sheet rising to 18 million, 61 cases, as we mentioned before. This is the cash coming in, and I think this is a very, very important slide. Not only is the cash on those older cases, really pre-Jackson cases, up almost 50% on last year, the cash this year is going to be very likely to be very, very significantly higher. Our 2 biggest claims are moving towards settlement. One is a £70 million tax avoidance claim, and one that we own. So if they offer us 10 million, our costs on that claim at the moment are £170,000. The other claim is a big professional negligence claim, fully insured, massive global financial services company, £20 million claim plus interest. They begged us for a mediation in July. We're gathering more evidence to maximise the claim. We're sitting down in September. Clearly, if they don't put the right numbers in, we'll keep on pushing them forward. But I think there's every interest in them putting some very, very strong offers. And because we own these claims, if we like those numbers, we'll just take the money. So what could this mean going into the future? How long have I got? 6 minutes. That's perfect. So we've decided to talk to our institutional shareholders about this, and I was very keen to share this with the retail market as well. So I mentioned the 2,300 cases in the UK insolvency market annually. The headline claims, don't pay much attention to that. It's 500. It's $1 billion. The crucial thing is this: £500 million in cash recovered off directors not paying their taxes, and nicking the assets, nicking the business, setting up a pre-pack, all the stuff that we're all horrified about. So what if Manolete were to achieve a 30% market share? What would that mean? So that would mean, in my mind, 50% stays on that awful old model that never delivers to the creditors. So let's say, it's just such an antiquated model. It's very hard. They've been doing it for 15 years. Let's say we never change them. Let's say we get some competition in, proper competition. They've been and gone. Burford had a product that's been and gone. Ferguson Litigation Funding had a product. They laid off all their staff. They've been and gone. You've really got to know what you're doing in this market. But let's say, very generously, they get 20%, whoever they are, the competition, they get 20% market share. We're left with 30%. So that would mean 30% of the 500 would give Manolete total recoveries of £150 million a year. Our costs, year in, year out on these cases, are 15% of those recoveries, which would mean they're a pot to share with the creditors of £130 million. So let's be really generous. Usually it's kind of more like 50-50. Let's say the creditors are getting 60%, Manolete's getting 40%. Okay, let's just work the numbers on that. That would give us gross profit of £50 million. Our overheads currently are 3 million, trending to 4 million with these new hires, the marketing spend. My CFO had a heart attack when I said, well, look, let's throw in 50 because I can do the maths easily in front of all these people. So let's call it 40, EBIT. The tax rate, as I understand, well done, Conservative Party, moving down to 17%. We like that. So that would give you post-tax earnings of £35 million. We just reported to March 19 post-tax profits of £5.5 million. Now, that's how this works on a 30% market share. I didn't say this last time I met all of you a few months ago. I wasn't confident enough to see, would these lawyers come aboard quickly? Could they bring in the new cases? Would the IPO attract the big 4 cases, the big 20 cases? I am now. I don't see any barrier to why, as at a minimum, we can't be hitting that market. And that was a message to the institutions last week. We put it on the website straight away, and that is a message to you guys today. I'm slightly ahead of time, but that really is what I have to say today, so I'm very happy to take questions.
You delivered, as you said, on the dividend.
Sorry?
You have delivered on the dividend,
Yep.
as you said.
Yep.
Next thing is, what's the plan for the next funding? Are you going to get any money from the US or any another fund?
I don't see us needing a penny more.
Okay.
I think the cash inflows this year from those, particularly those 2 big cases, but we're closing cases 3 a month at the moment, closing. We're signing new cases 7 a month at the moment. Take another one of our listed peers, Litigation Capital Management. I don't know much about them. They said when they IPO'd, they were going to close 8 cases in this financial year. Looks like Arden said they're going to close 5 for this year. That's what Manolete does in 6 weeks. And that generates cash. You're going to see, if it carries on the way it is, you're going to see a huge cash machine.
Question towards the front, please.
Yep. Another one was,
Oh, sorry. Okay.
is any plan to go in another country like Australia?
It's an excellent question. The jury is out. I went to my first Insol conference a couple of weeks ago in Guernsey, just by myself, just to meet with people like EY. They gave me two cases while I was out there. Thank you very much, Stuart. The jury is out. My worry is the defendants we're going at here, we can see their assets, we can see what property they own, we can see what businesses they're currently running at Companies House. That's a very, very nice environment to work in. And we can buy the claims. The minute you step outside, I question all of those really core operational purposes. And I think the market opportunity we're looking at in the UK is huge anyway. So I don't want to be, who was that, Purple Bricks, Marks & Spencer, Tesco. They've all had such problems, and I'm determined not to make the same mistake.
Question here, please.
Hi, good evening. My question to you is that you have 84 live cases at the moment, so how do you assign valuation? How do you value those cases?
Oh, sure. So what we do is at every reporting period, at 6 months and at 12 months for the annual accounts, anything where we're holding the value of the case at £100,000 or above, the solicitors and barristers working on those cases are asked to do the valuation, to do a full paper legal assessment, do the valuation, and that is passed to the auditors. So it's completely independent. What we will often do, now these people, they're working on the case, there's no point in them saying, oh, well, we think we're going to get 20 million on this, 2 million on this. These cases are over really fast. On that duration slide, our average duration of cases is just 11 months, going down to 8 months and 6 months in the last two vintages. So it is not in the lawyer's interest to oversell the prospects of the case. If we think they're overselling the prospects of the case, with the board of directors, we'll just discount the value. So that is the process that gets done. When you look at the £18 million of carrying value of investments at the moment, it's not Burford type stuff that's in 2012, 2013. I don't know how you value that. I'm sorry. When something goes on for so long, I don't know. I can value something, and clearly these external lawyers can value something that's going to close in the next 6 months, the next 8 months, the next 11 months. And sure as eggs is eggs, by the time they've signed the audit report, half our book is closed during that audit period. So you've got a huge amount of 20/20 hindsight because the durations are so short. Why are they so short? Because we're in control. We own them. We can take the deal. We can make an offer. We can close it down.
So from your 6-monthly report, or let's say 2017 report to 2018 report, the numbers would change significantly for the live cases if they haven't settled in that period?
If they hadn't settled, yes, that's right. But at the moment, we are buying 7 new cases a month. We're completing 3 cases a month. So clearly, the portfolio, as we're growing so fast, is increasing. And so, of course, the short-term impact of that is the unrealised element of the profits will be higher in the short term. But when and if we can close, particularly these 2 big cases that I was talking about, that will be absolutely swamped. Those numbers will be completely insignificant with the kind of numbers and the kind of size of cases that are coming through now. And by the way, I think these questions on unrealised profits are fantastic questions. It is the one area where anyone marking to market can manipulate profits. It's incredibly important that everyone is very open about this. Thank you.
Hello. Your financial reports, last time, the last financial report was perfect, yeah? But the price shares went down. Is it because your broker, Peel Hunt, downgraded you?
Yeah. Well, they
Why was
upgraded the price. It's a great question, one that I wasn't particularly happy about. So they increased their target price of the shares from, I think, 290 to 450. They'd said kept it at 250 for all the time. The shares were up to 590, etc. For some reason, they pulled it back to 450. They put a hold on the shares rather than a buy, and yeah.
But why have they done it? Because it's your broker, isn't it?
They were behind the curve for the last 7 months.
Oh,
You can finish the sentence for me.
Next question, please. Gentleman here, thank you.
You said something about cartel cases. Could you say a little bit more?
Yeah, no, thank you for asking. So what we did quite uniquely was in 2018, 20 of the cases we bought in that year were claims of companies that have been buying trucks off European manufacturers between the years 1997 to 2011. And what was proven by the European Commission, so liability has been fully established, was that there was a price-fixing cartel in operation during those years. So what you have going through the law courts at the moment is the Royal Mail saying, sorry, truck manufacturers, you overcharged me. Can I have my money back, please? And interest going back 15 years. Thank you. You've got a huge road haulage association, class action, I believe being funded by the excellent firm Therium, who are, again, but with the solvent living companies. So we had the idea, rather good idea, surely the companies that have gone bust, they were buying trucks as well. Why aren't their creditors getting some money back for all the overpriced trucks they were. So we bought, now 20 claims in 18, we bought 2 more in 22, I think that's it. Handed it over to our lawyers, and they're running it with Punter Southall, putting the price on it. The 2 main claims, and I can talk about this now because it's been in the administrators' reports. So the 2 main claims are Comet and CityLink. Manolete Partners owns 90% of those claims. 90% of those claims. We paid £125,000 and £100,000 respectively. The value of trucks bought, this isn't the claim size, the value of trucks bought during that period was about £100 million each for those 2 companies. There's 5 other claims that not to that level, not as good as those, but the numbers are juicy. The others are less juicy. We're asking the liquidators, please try and find more evidence. But there's a core that we're now focusing in on. Quite honestly, sir, if it's just the Comet and CityLink claims, we'll do rather nicely.
Can you go through the mechanics of how a case is dealt with?
Yeah, sure. Yeah, excellent question. So today, good example. 2 new cases came in today. One to me, one to the head of legal, Mina Halton. We hand that to one of the in-house lawyers that you saw, who's got capacity to look at it. The first thing they do is assess who the defendants are. Was it directors? Is it Cobham, case we had against Cobham? And that is handed to the net worth team. Before any legal work is done whatsoever, it goes to 2 specialised in-house employees who look at what is the financial capacity of the people that we're being asked to sue. If they're living in a council house and not involved in any company, out of work, we're not there to kick them when they're down. They're not the bad guys we're after. We're after the guy who actually is at the golf club and has just flipped his company, completely screwed his suppliers, and just transferred the customer base into a nice, clean newco. So we're looking at his £5 million debt-free house in Surrey. That's what we're after. If it passes the net worth check, it then goes to that lawyer to do a deep dive on the legals.
I just had one question, if I can, about those lawyers that have come on. And you said they're at partner level. Do they get equity in Manolete?
Yeah.
What's the arrangement with those guys?
Yeah, so they're on a base salary that averages about £100,000, and it's surprising. You know, people often talk about overpaid lawyers. You know, in our sector, they're not overpaid. They're all getting a raise when they come into Manolete. They get a bonus of between £10,000 and £30,000 a year would be typical. And after 6 months, they get their CSOP, the government's very tax-friendly allocation of authorised share options at the current market price. And that's right in my view. They're coming in at the price where we've taken it to. They're now joining the team, help us take it to the next level, the next level, the next level.
Okay. On that note, Stephen, we're out of time. Thank you very much indeed.
Thank you. Cheers.